Hey everybody, it's Rick Mount, Paradigm Mortgage Group, part of the Mike Hardy and Rick Mount team here. Want to bring you this week's market update. We had a lot going on yesterday. Many people had the day off and others had to work, but it was a federal holiday to observe Martin Luther King Day. So hope you enjoyed the day. And then it was also a big event as we had the inauguration of President Barack Obama for a second term. So all of that could have a big impact on the market. So we're going to bring you this week's market update and tell you what's going on. Let's jump right into it. So as we can tell, Congress gets back to work today. They got the debt ceiling to deal with, that they're going to have to deal with over the next 4 months. Sorry about that as my screen reset there, guys. So we got that going on. That obviously can have a big market impact, as well as unemployment numbers that could come out later. But the 10-year Treasury note and the mortgage-backed securities are trading in a very narrow range. What that means, folks, is that we've got some volatility out there, but it's limited as far as the exposure. Again, the Fed is still buying about 85 billion. See this number right here, 85B, meaning billion, of treasuries and mortgages each month. And so we'll see next week. The FOMC, the Federal Open Market Committee, will meet again after the minutes are released. Last time their minutes were released, we were a little bit shocked in the market because they talked about slowing down their buying, but they haven't done anything yet. So we'll keep a close eye on that. Other news, U.S. has continued to improve. It's the best situation we've seen in the last 2 years. Many people are reporting that. This was a special survey done by Bloomberg, and many people are starting to feel a little more comfortable about what the economy is doing. And again, that could have an impact on rates, but as long as the Fed stays with their $85 billion purchases of Treasury mortgages, rates should continue to stay in a pretty healthy position. Many of you caught the President's inaugural speech yesterday. Some people are characterizing it as a little bit combative, maybe, as opposed to his tone back in 2009, but calling to get over the bipartisanship, actually get some stuff done. So we'll just all hold our breaths and wait and see if our government can come to some agreement as they deal with the debt ceiling and as well as some other stuff. So not much in the way of data this week. So let's look real quick at the interactive chart here so we can kind of see what's happening out there, how we think things are changing. So again, this is a 3-month look of the mortgage-backed securities and how they've traded. You can see there's a little bit of choppiness in here, and most recently we had a little bit of choppiness, but starting to rebound a little bit. Most of that was as a result of people feeling that the Fed was not going to continue to buy the mortgage-backed securities in this greater presence. So we're looking at a 1 month. You can kind of see we're bouncing. See these two levels of support right here. Pricing at 104 is a barrier that we seem to bounce off of. So it provides a level of support here, and then 104.5 is going to be a little bit of a ceiling resistance. So 50 basis points, guys, that really means that we're trading in a pretty narrow range. And again, you can look at it over the last 10 days. Had a bad day back here January 17th, but are starting to rebound a little bit. So we advise most of our clients that we should be locking. We should lock and take advantage of this. We're a little bit nervous about some of the uncertainty as the market begins to show signs of improving, and the volatility that could be created with the indecisiveness or the inability to get stuff done up on the Hill in Washington. So on a good note, year-over-year housing numbers were expected to be up across the nation. They were actually down 1% in December, but the good news is out here on the West Coast is that it's up 5%, and it's actually up 10% year-over-year. So the housing market in the West is definitely heating up, specifically here in California. Many of you guys out there are making offers. Certainly understand the competitiveness. We've seen many clients in multiple offer situations and becoming very competitive. So there's a little bit less than a 2.5 month supply of inventory out there for the SoCal market, and that's obviously putting some pressure on price. So if you have any questions about how to make your offer more competitive, like to talk a little more about where the interest rates are going, or to have us do any analysis for you to see if anything would make sense, we're here to help. Hope you have a great week, and we'll talk to you guys soon.